Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, July 31st, 2008. Well, today was the last day of July. The month is coming to a close here, and we had a decline on Wall Street across the board. The S&P was down about 17, the Dow was down 205, and the Nasdaq declined, just a little bit here on the day, closing down about 4 points on decent volume across the board. There was good volume today. It was about average, I would say. Nothing major about the volume, but really what happened today was GDP at 8:30 in the morning was the first shock to the market. But the market really did not react, over the course of the day too negatively to that GDP. And just to explain what happened was you basically had the futures trading up, and we're going to go into the charts here, but let me set the scene. You had the futures trading up slightly on the day going into that 8:30 number, 8:30 a.m. Eastern Time GDP number. On that number, you got a sell-off in the futures on the S&P futures, the ESU 8 contract, basically taking us all the way down to, down 11, 12 points. But on the open, the market was able to fight back at some points, going actually filling the gap on the SPY and on the futures, going back to about the flat line. Now, that was all fine and dandy until Greenspan got on TV in the mid-afternoon and started talking negatively about Freddie and Fannie Mae. All right, and once that started, the market started to tank a little bit, and you saw a nice sell-off by the end of the day. Again, the Dow down 205, Nasdaq just down a few points, and the S&P was down sizably as well here. Russell 2000 was down, New York Stock Exchange was down nicely as well. Across the board, a hefty sell-off. But let's be honest, guys. We knew there was a pullback coming. You guys know, you've been watching our videos long enough to know that when you have a move up over the last 2 days like we saw, which was basically 400 points in the Dow, you're going to have a pullback day. So you got a 50% retracement today. Now we're going to continue to watch the charts to see where the next move is. And we talked about that yesterday. We talked about the double top, and I'm going to go through that first and foremost today about the charts, the intraday, the daily. I want to look at a lot of time frame today, do a lot of time frame analysis, because time is a key component of analysis when you're doing technicals. All right. So before we get into that, I just want to remind everyone that you have this is the InTheMoneyStocks.com website, what you can see of it at least. And if you just scroll down on the webinar page, you see the webinar, which is this Saturday, August 2nd. Come and sign up. Just click right here on this click here to sign up tab, and you can sign up. And here right below it, right down here, you can read exactly what's covered in that webinar. All right? And right now, again, as I say, you should get involved with it. As when the new website goes up, there'll be a few changes on the website to that webinar, okay? So again, take a look at that, and we'll talk about that more. Now, what I want to go over here, you have the intraday chart of the ESU8 contract, the September '08 E-mini S&P 500, and what you could see here was actually a very choppy day. I mean, it wasn't a lot of volatility until the end of the day sell-off, meaning that the swings were not huge by any stretch, but it was pretty choppy nonetheless. And here you can basically see the run-up into the GDP number. Now, one thing that we teach in the chat room, and again, you should come and join the chat room and check it out. It's a great coaching environment where lots of traders get together and we go over technicals. We talk about trading. People call out trades all day long, and support and resistance and technicals that we're seeing left and right. 10 times better than anything out there, we think. In any case, what you did see here and what we teach in the chat room is when you have 2 consecutive up days and you're gapping up for the third day, or you're up in the morning, oftentimes you'll see any type of economic news has already been factored in, and this is psychological technicals, if you would call that. So what you had today basically was the market up so much in the last 2 days that GDP would have had to blown things out of the market, out of the water really, to have a continued move up. And that's precisely what you saw here. You saw the run up into that number, the market's being positive, GDP comes out, and you see a major tank pre-market. All right. Then what do we get? We get the market to open and people buy back in, and this is showing resilience in the market, which is very good to see. All right. But we get to a high here, you start selling off again, you double bottom, so you get double bottom support, and this was a great buy down here on the futures or on the SPY, and you get another retrace up here, really to a double top, where you're double topping right in this range. You didn't quite get there, but you almost got there. And then this is where Greenspan starts to talk right in the afternoon, right before 3 o'clock, right around 3 o'clock, talking about Freddie and Fannie and insolvency, and you name it, it kind of came over the markets. And people got a little bit scared. And they did take some profits. And the reason, you can also attribute the reason to taking profits to one other issue too, which is the jobs number tomorrow, which is huge for this market. So watch that 8:30 a.m. Eastern number tomorrow, the jobs number coming out at, again, 8:30 a.m. Eastern time. And as you can see, the market sold off into the close, closing really at the lows today. And again, the Dow down about 205 points. Now, positives, negatives out there today. We knew that oil had a big rally yesterday, and we'll talk about the USO. So oil rallied up about $4 to $5 yesterday. Today it retraced half that move. Just like the market today on the Dow retraced of the 400-point move approximately it had over the last 2 days, you got to retrace. Now, those of you that know technicals and understand markets, retraces are nothing bad. You expect them, they're healthy. That's what we've been talking about the prior couple days, consolidation, retrace, pullback type situation after a mega move, and you have to understand that you're going to need them. So you see here, here's the oil chart from yesterday where it started the big run. You had a big move like that. Today you retraced about half that move and came in a solid sideways pattern. All right, and I can even flip back a little more in that chart so you can see the actual whole move here in the oil chart, and you retraced about half of that move, which is fine. Now the question is, going on the oil trade now, you've had a big move yesterday. Was that a change in direction or was that just a bounce? And we're going to know more tomorrow, obviously, with the oil trade, because today could have just been a retrace pullback before another push up. Or do we go down again tomorrow and maybe take out the lows from yesterday, in which case it indicates another leg down in oil. So we really want to watch that tomorrow. Either way, you could be looking at it two ways, but we will have the final piece of that puzzle tomorrow based on what oil does, I think. Whether or not we go back up, that would mean that was just a pullback yesterday, or do we sell off and go back to the lows, in which case that could be a signal that we're going to head back lower again. All right, the SPY, what I want to touch on here, and I want to go over a couple different time frame patterns and just show what's been going on, because in all fairness, the last couple days we had a huge move up. And first I want to look at the 60-minute chart. And I hear you in the 60-minute chart, you can see the volatility of this market. I mean, you had a huge sell-off, then you had over the last 2 days a big retrace, and now a sell-off again today. And it almost looks like a giant M pattern, or maybe it's going to start to form a W pattern. We're not sure yet, but that's going to be one of the key facets that we're going to look at. But either way, I mean, this is clear as day, guys. I mean, if you're a buyer in this market down here, or even up here, or even up here, where are you going to sell? I mean, this is technical analysis 101, understanding. All right, if you know the 60-minute chart to watch it, you're going to obviously, you see the market come up into this point right here, you're selling it. That's double top resistance to a T on the 60-minute, and look at that. All right, no-brainer sell-off right there. Obviously, should come in. That's where you're gonna sell right into the double top, and we'll show you that on the daily as well. But a clear signal. Now let's go to the 180-minute chart so we can see actually a little more of the picture here, looking at technical analysis. And there you can see the double top pattern right there. Now the key is here. You can look at the chart and you can see the massive sell-off we saw. Then on the nice bounce back up, the double top formation after a pullback, and now again we want to see, do we see more of a pullback? One thing I will say is you have good support right here at the 20 moving average on the 180 chart, and that is going to be very solid support. All right, we may probably touch that at some point tomorrow. It's not very much lower. We're almost there right now. But again, the question will be on this jobs number, which way do we go? That's going to have everything to do with everything, I think, for the course of the day. So keep an eye on that. Now I want to go to the daily chart. Right before I do, though, guys, take a look at the trend lines that have developed here, okay? Look at the bottom trend line right here, all right? You have a nice bottom trend line. Should the 180-minute chart come through, hit this support area, next support would be the 50 moving average right here, okay, which is right there. I just drew it in. Should it get through that, next support, guys, dead on right at this point. You just draw this on your chart. This would be the buying opportunity for a bounce, a quick bounce off of that move through it after that point. You just have to connect the bottoms of these charts, connect them in the proper way, and understand that. And again, you'll learn a lot of that stuff in the webinar, guys, so I do encourage you to take it. But this is just trading 101 kind of stuff where you want to figure out bottoms, where to buy, where to sell. You always want to have a reason for buying or selling. There has to be support, has to be a divergence, there has to be a calculation to make you understand and make you just can't kind of pick an arbitrary area and say, oh, I think this is sold off enough. You have to say why. And that's the key, guys. So again, flipping to the daily chart now, what you can see is that double top we pointed out on the 60-minute chart and the 180 chart. And you can see that resistance point. So that's a no-brainer. Now, one thing I will say, guys, is that you can draw this line all the way over here as well and see it coincides with this top right over here. So you're having basically resistance. Ever since it got below here, this line has been resistance. Now, it traded all the way down here, retraced to that same resistance point, fell back, retraced here. Now, on the downside, on the daily, you're talking about the 20 moving averages being support right here. All right, on the SPY, it's about 125.40, give or take. That's an approximate number. On the upside now, the key is here, once we get through this line. You get through this line, it's a clear shot to the 50 moving average, which is right here. And I hope you guys can see that. Let me draw it in. The 50 moving average, there we go. Now, that price is approximately right now 131.20. Now, that'll adjust downwards because moving averages obviously move with the market every day on a daily moving average. So it's going to come down as each day progresses, but you can look and follow your chart line should we get through this support resistance line on the top side for that to get through. Now, the other thing I want to talk about now as well is to go to the weekly chart and the monthly chart quickly and just point that out, because it's always good to expand your time frames. We're big on that. And you could see here going back even more so that this is a key support line in the markets. I'm drawing it back, going back all the way to January, and look where we are. We're right on the cusp of this line. So it shows you how important this time frame and this point in the markets is. We're hovering right on a level where if we break down, we go back to the lows. If we're able to get above, you could have a solid rally on your hands. We happen to think that it's going to be whippy, but you may see through options X a possible move up in this market after we get a little bit of a consolidation pullback should that happen. So again, just note this on the weekly chart. This is a key level right now in the markets. I can't stress that enough. We have to see which way it goes. Whichever way it goes, you're going to have a solid move that way. Have a wonderful day, guys. Join the webinar, join the chat room, join the Swing Trade Alerts. We'll talk to you tomorrow. Take care.